A closely watched report on U.S. inflation showed consumer price increases ticked lower on an annual basis during the month of September, but core prices remained sticky. According to the latest data from the Bureau of Labor Statistics released Thursday morning, the Consumer Price Index, CPI, increased 2.4% over the prior year in September, a slight deceleration compared to August's 2.5% annual gain in prices. The yearly increase, which was the lowest annual headline reading since Feb 2021, came in hotter than economist expectations of a 2.3% annual increase. The index rose 0.2% over the previous month, matching the increase seen in August and also hotter than economist estimates of a 0.1% uptick. On a core basis, which strips out the more volatile costs of food and gas, prices in September climbed 0.3% over the prior month, stronger than the 0.2% uptick economists had expected, and 3.3% over last year. Core prices rose 0.3% month over month and 3.2% on an annual basis in August. As the third quarter earnings season approaches, with big banks set to kick it all off on Friday, Robinhood head of investment strategy Stephanie Gill joins Catalysts to discuss retail trading trends ahead of this crucial period. Gill observes a clear pattern among Robinhood customers. They trim their winnings and buy the stocks that have been dipping. She cites Tesla, TSLA, as an example, noting that investors who saw gains over the past month were selling to invest in temporarily underperforming stocks like Nvidia, NVDA. However, she emphasizes that in terms of risk appetite, individuals are truly committed to these long-term positions, particularly in the Magnificent Seven tech stocks, as these are companies they know and use. Gill likens retail investors' trading behavior to that of a portfolio manager, noting that they trade around the volatility. Regarding her market outlook for the year, Gill has set a year-end target of 5,800 for the S&P 500, GSPC, with a 20% chance of the market reaching 6,100. More importantly, we're still in the midst of a very young bull market. At 22 months, since October of 2022, we've just surpassed the shortest bull market in history, 21 months. The average bull market, for comparison, lasts about 61 months. The average bear market, on the other hand, lasts about 9.5 months, which is exactly what we saw with the bear market that began at the end of 2021 and ran through mid-October of 2022. Over a long enough period, say the years captured by this 100-year chart, the U.S. stock markets perpetually lean bullish. The bullish lean comes from a combination of economic growth, productivity gains, modest inflation, and a healthy market full of companies that operate with world-leading transparency and attract global capital. Even considering the impact of the pandemic crash, the Great Recession, the dot-com bubble, Black Monday, the Nifty 50, etc., long-term investors have enjoyed significant returns over the decades.